Hey guys, welcome back to the channel. If you're new here, my name is Kenya. I'm a summer associate at Backstage Capital, and today I'm going to give you a beginner level introduction to venture capital. So first I'll go over what is venture capital, and then I'll talk about why founders want venture capital, and then finally I'll go over what VCs are driven by, and I'll give you a quick rule of thumb for investing in startups. So if you're interested in any of this, feel free to keep on watching. Okay, so I was just going through my edit and I realized I didn't really explain venture capital that well, so I'm going to re-explain it right now. To put it simply, venture capital is basically a type of investment where a VC firm will give a startup money in exchange for equity in the business. So to break it down even further, like when you look at a lot of the big companies now, like Amazon, Apple, Google, Facebook, Uber, like all of these companies, they're obviously billion-dollar companies right now. They're dominating their market, but originally they were smaller companies. And so this is where like venture capitalists, they go and invest in a company while it's still small, hoping that the company will become a unicorn and, IPO, become public, and basically the VC will get their returns from that investment. So as someone that likes sports, I like to compare venture capital to scouting, because like as a VC, like your job is to pick the startups before they become big companies, like I just said. And that's similar to sports, because as a sports scout, like if I'm working for the Warriors, for example, or if I'm working for like the Tampa Bay Buccaneers, like I'm trying to get the next Steph Curry or the next Tom Brady, the next like great player, so that my franchise can win games and win championships and ultimately make money. And so it's very similar with VC, because you're trying to pick the companies before they're, Uber or Facebook, before they are, those very successful companies. Also, it's important to note the difference between venture capital and angel investing. As a venture capitalist, you're not investing your own money, you're investing your investors' money. So you're investing money on your investors' behalf. So it's important to note that, because there's also something called angel investing. And angel investing is when you invest your own money into a startup. So for example, like Mark Cuban, if he's investing his personal money into a startup because he believes that the startup is going to do well, then that's angel investing. But as a venture capitalist, you can start your own fund, but you're not actually investing your personal money, you're investing your investors' money. And we call these people limited partners. I'm gonna make a separate video in the future about like the different players in VC, but for now, just know the difference between angel investing, which is investing your personal money, and venture capital, which is investing your investors' money. But yeah, next I'm going to talk about like why an entrepreneur, we call these founders, why would a founder of a startup want venture capital? So I'm going to talk about that next. Okay, now why is venture capital beneficial for founders? Well, if you're a founder of a company, usually like one of the biggest problems that many small businesses but also high growth startups face is getting financing for their business, for having runway in the future. And so a lot of founders are looking for venture capital to have runway, but also to scale their business. So if you're in the idea stage, but you're trying to create a product, or you've already created a product and you're trying to scale your business and get more employees, then you have to get financing for that. And so that's where founders go to venture capitalists, because with VCs, they're getting debt-free or really loan-free money. So they're not paying interest, and that's one of the biggest pros of getting VC money. Because as a founder, you are giving away some of your equity in the business, but you're also getting interest-free capital. So that's one of the main benefits of getting venture capital. So to summarize, the main benefits of getting VC capital for founders is that they're getting interest-free capital. They're also getting money to scale their business. And finally, a lot of founders, they just want a sounding board or an advisor for some of their problems. And that's where VCs can also come in, because they can give advice. Usually a lot of VC investors have entrepreneurial experience, or they're just experienced investors. So they've dealt with a lot of the problems that founders have, and they can give advice on those problems. Okay, so what are VC firms driven by? Well, as I mentioned before, VCs are investing on their investors' behalf. So VCs are, again, kind of like the middlemen. So as a result, VCs are obligated to generate returns for their investors in order for themselves to actually make money. So when looking at what drives a VC, ultimately it's to generate as high of a return as possible. And in general, VCs generate a 3x return, and they're usually looking for a 10x return when looking at the startups. Okay, so how do VCs generate the most returns? So a quick rule of thumb for investing is if you invest early and the company continues to grow, then you're going to make more money than if you invest at a mid-stage or even a later stage startup. However, when VCs invest at an early stage, there's a lot more risk because usually you don't have access to financials, and usually the company doesn't have a lot of traction, if they even have a product at that point. So yes, you can invest at an early stage and make higher returns, but you're going to absorb more risk. And so because of that, a lot of VC firms have different strategies. Like some will invest in a lot of startups at a lower check size, while others will invest in fewer startups, but they'll invest more money. So it all depends on what the strategy of the fund is. But yeah, that's kind of a general overview of what VCs are driven by. So I hope you guys have a better idea of what venture capital is. If you have any questions, feel free to comment them down below. And also, if you enjoyed this video, feel free to like it. It is free. And also, feel free to check out some of my other videos. Anyway, I'll see you guys in the next one. Peace.